So in the year 2000, Saddam Hussein tried to sell Iraq's oil in euros instead of dollars for the first time, and look what happened 3 years later. In 2011, Gaddafi tried to sell Libya's oil with a gold-backed currency that was supposed to fund all of Africa. Look what happened to him just a year later.
We came, we saw, he died.
And today, in 2026, Iran tried for the first time ever to sell their oil with Chinese yuan. And you're starting to see the pattern, right? These aren't just isolated wars. They are the enforcement mechanism for the world's reserve currency. Anytime a country tries to sell its oil outside of the dollar, they aren't just changing a trade policy, they're actively dismantling the scaffolding that keeps the Ponzi scheme of this dollar afloat. For the past 50 years, there's been a scaffolding that we called the bond market holding up the financial system. And what I mean by that is that the bond market literally holds up your paycheck, your car loan, your savings, pretty much everything attached to finances gets touched by the bond market. And for the first time ever, it's flashing red. I'm going to show you 3 things. Number 1 is what happened in 1971. Everyone talks about how since then, the dollar has gone down 99%. President Nixon took this off the gold standard. Okay, I get that, but there's more to the story. And number 2, what happened in 1974? This is something that I haven't heard anyone else on YouTube explain, and it actually is the most important thing and the reason why the bond market is screaming red, and the biggest reason why our money is becoming devalued and everything is becoming more expensive. And the last reason is, okay, why is this happening? Why is this coming apart right now, today, in 2026? My name is Ivan Hidalgo. 80% of my net worth has been in gold over the past 7 years. And I recently moved to El Salvador to escape the West. I escaped Canada. So yeah, this is the Golden Bear where we stack hard metals and watch the empire fall. So before we go back to 1971, I just want to give you a 45-second explanation on what the bond market actually is and why is it so important. The global bond market is worth about $140 trillion. So if you were to put together some of the largest stock markets in the world, it wouldn't even come close to the size of the bond market. And when something that huge, that affects almost everything when it comes to the financial world, I'm talking about your mortgage, your car loans, businesses taking out debt, all of that is affected by the bond market. So when confidence in that market goes up, the cost of borrowing goes down. When confidence collapses, everything gets more expensive. And the way you measure that confidence is with the yield, with the interest rate. That's what people say to the government, hey, I'll lend you my money, but what's the yield you're going to give me? That yield has hit a 19-year high, which means the dollar's confidence, the confidence that people have in this dollar is at an all-time low. To understand why, we have to start back in 1971.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Okay, so the date is August 15th, 1971. Richard Nixon just went on TV and announced that the dollar is now going to be depegged from gold. Up until that night, the dollar was essentially a claim check. You could, in theory, essentially walk into Wells Fargo or Citibank and ask for gold. Now, we all know the famous saying, he called this temporary, and temporary has been the past 55 years. But if you strip the political language away and actually understand the facts, he pretty much just said that the US government defaulted on its debt. The US had a promise that your dollars were redeemable in gold, and you could go in and you could give them dollars and they would give you gold, but that no longer exists anymore. So overnight, the dollar stopped being a gold-backed currency. It just became a promise backed by another promise. The proof is in one chart. This is a chart that goes back to 1971. Gold was at $35. Today, it's about $4,300. So you could say that gold is up 130 times, or you could just say that the dollar is down against real money 99%. So every government on earth at this time faced a big question. What do you do with a currency that has nothing backing it? Well, the answer came 3 years later in 1974. Now, we're going to jump to some dates here, but each one is more important than the last. It's July 1974, and a U.S. Treasury official named William Simon, a former bond trader with Salomon Brothers, flies to Saudi Arabia. This guy made a deal that has run the entire world ever since. Almost every channel up there is going to tell you, okay, Saudi Arabia priced its oil in dollars, which yes, okay, it did. But the real story is something that we're going to call petro-recycling. And petro-recycling is this. Okay, step one, the Saudis sell their oil, but they sell it in dollars. That means every other country in the world that wants to buy oil from the number one producing country in the world needs to buy dollars. Okay, so there's a demand, but step two is even more genius. They're making so much money, the Saudis are making so much money, that they're like, okay, well, where do we even park this money? Well, you park it in treasury bonds. They lend it right back to the United States. And in return, the United States, with their massive army, becomes the muscle for Saudi Arabia. And the Saudi king demanded it became secret, and he got his wish for the past 41 years. Nobody really knew how many treasury bonds the Saudis had. It was a complete state secret. To rewind here a little bit, look at what this machine does. Oil creates demand for dollars, and that creates demand for a place to park it for US treasuries. So in one deal in 1974, all of a sudden, 3 years later, after 1971, there's a whole massive use case for this paper currency. This dollar has a permanent structural guarantee that would last until, well, in my argument is till this year. What's happening now isn't a machine lapsing on a single day. It's not like the US debt market is just going to explode on a single day. It's a 50-year-old machine marching slower as time goes on. But to understand the real motive behind this, we actually have to go just 2 months before this deal in 1974, because it wasn't really about oil at all. So 2 months prior, in April 1974, Henry Kissinger, the Secretary of the State, you've heard his name, a lot of weird corrupt stuff in Cambodia and in Vietnam, but we're not going to go there. So he holds a secret meeting in the State Department. The transcript has now been declassified, and there's a couple of pieces of information in there that I really want to show you. In that meeting, Henry Kissinger's economic guy, a guy called Thomas Enders, lays out a plan that would absolutely change this little shiny metal thing that I'm holding in my hand here and the world financial markets as we know it. I want to read his exact words here. So Enders says this: "It does present an opportunity to move towards a demonetization of gold to begin to get gold moving out of the system." Okay, so to get gold out of the system, Kissinger rightfully asks after, why are we so eager to get out of gold? And the answer Enders gives is really the full picture here. He explains that if gold is going to stay in the financial system, it needs to be revalued, repriced periodically. And at that time, the majority of the world's gold isn't in America. It's in Western Europe. So whoever holds the most gold holds the most money. And at that time, it wasn't going to be the United States. So they had to bury gold and they had to revamp or recreate their own money. So they made a choice. They buried gold and they put US debt in its place. The PetroDollar wasn't built to make the dollar stronger. It was built to make gold weaker, to make it irrelevant, to really systematically push it out of the system so people would forget about it for 40, 50 years. Until just recently, gold has been really out of the limelight. And anyone who's told you to invest into gold has always been seen as a little crazy. So that's the machine. Built in 1974, that scaffolding, that bond market replaced the oldest money in the world. But it's coming apart as quickly as it came together. Just in the past year, for the first time in my lifetime, central banks hold more of this shiny metal than they do US Treasury bonds. That's the first time it's happened in 30 years. The smartest money on the planet, the guys who literally create the currencies, are selling US dollars and buying this shiny yellow rock. Just in 2025 alone, central banks bought 826 tons of this stuff. And China's central bank has been adding continuously for the past 18 months to their gold reserves. So for the past 50 years, yes, the dollar had some sort of amalgamous value attached to the bond system, but as they continue to print more and more, guys who continue to sell petro no longer need to rely on the dollar and can sell it in gold or, like we saw in Iran, Chinese yuan. Well, it's becoming more and more important to walk away from dollars and from bonds and to walk towards things that have been real money for the past 3,000 years. And in this case, there's only one. So this is the invisible scaffolding. It's coming down, and honestly, it should make you pretty angry. Everything will get more expensive. This will get more expensive. Phones will get more expensive. Watches, assets, their stock market will get more expensive as the dollar will continue to become less and less valuable. So if you're watching this, you maybe own a little bit of gold and you've been watching the markets lately and be like, oh no, like it's been going down for the past 3 or 4 months. That was a good hunch. You were right. Don't let the price dissuade you. This is the correct thesis to be in the long term. I, like Russia, like China, have been stacking up on gold. It's the only money in human history that has no off switch. Stack the gold, pay off the debt, get out of the system, and I'll see you in the next one.